The market fails to break out and tumbles, filling out our downside. Is there more bear, or will the bulls fight back? This is Invest with Jacob. Okay, guys, so in this week's video, we were talking about the fact that we were looking for the ES to get down to its 21-week moving average and maybe give us a little bounce before that and then move down. And that's exactly what we saw as the market gave us a little bit of a bounce and then started to move down toward that 21-week moving average. The question is, will the bears follow through or can the bulls fight back? I'll get into that in just one second. But first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP 500 and the NASDAQ. Highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, I am on the road again, as you can see, with a different background. We will be in an Airbnb for a month and then traveling in our RV again for a month and then back in our house in Vegas. So you're going to see some different backgrounds, but it's all the same information. So now let's jump into the chart and take a look. Okay, guys, so here we are on the 1-hour futures chart for the S&P 500. We've been talking about this move off of the high. I told you it was potentially a 5-wave move until they failed. Then it turned into an A, B, and now we have 3 down for C. I told you we should get a bounce in 4 and then down in 5, and so far that's what we're getting, with 4 playing out as a triangle here and then failing to the downside. We have a setup for them to go ahead and bring it down towards that 53.85 area. That would be where the 21-week moving average is that we've talked about. There's also heavy support over here. This box that I've drawn is a heavy support zone. We would expect the chart to hold that area and then give us a bounce. And what we're looking for here is actually a move back to all-time highs. Now, this is going to be what we think is the 5th wave of this ending diagonal off of the April lows. We have seen 3-wave structures all the way up, and this wave 4 down into wave 1 territory also tells us that that's likely the case. So we would look for an ABC back towards the 58.31 area for this wave 5 to complete this overall cycle, and then we would be looking for some kind of turnover and top from there and a sell from that particular area. So the bulls are looking to hold this 53.85 area, push forward in 3 waves up toward the 58.31 area. And again, that will be a very ugly kind of back and forth move, because just because this is 3 big waves doesn't mean it's, you still have to worry about these 3 little waves and these 3 little waves. And so there's going to be a lot of whipsaw and volatility in this market, especially with the Fed and earnings and everything else coming up. So 58.31 is our target to the upside. We would like to see them hold 53.85. Now, if you're a bear and you're looking for a breakdown to the low side, 53.85 is your first key level, but really you're looking for this low right here at about 52.67, 52.70 to break. If this breaks, that's kind of the first warning for the bulls. If they can get through this, they would likely test the April lows back here down around 5,000. And if they break the April lows, that is a major warning to the bulls that we have a top in place and we are looking lower overall in a much bigger correction. I don't see that without the last wave, and the reason for that is off of the April lows, we still only have 3 waves. You have your first move up, your pullback, your wave 3, your wave 4, and I would expect a wave 5 here to play out. So this is why we're expecting higher. We're expecting support to hold. There's a major support shelf right along this blue box here at the 50, where the 21-week moving average is, and you get this shelf right here, this previous high. You've also got this support that they're fighting right here. So there's a lot of support through here for the bears to break through on their first attempt. I don't think that's going to be the case, especially with the 21-week moving average right on this blue box. 53.85 looks like a good number. They can go a little bit lower than that, as I said. Breaking this would be a problem, first problem for the bulls. But overall, the key levels here are going to be 53.85 followed up by 52.70 to the downside. Again, to the upside, they want to push, and if they can get back over this 56.30 level, that's a very strong indication that we're headed towards 58.31. Over on the NASDAQ, again, NASDAQ's a very different story, where we've been talking about the potential that the NASDAQ has topped already. They are getting closer to fulfilling that potential if they continue to break to the downside. The next major level for the NASDAQ is this low right here at about 18,500. Below that low is the first warning for the bulls on the NASDAQ, and then below the April lows would be the real big warning shot to the bulls that the top is in, and we're looking at a much bigger correction. So overall on the NASDAQ, we can count this a couple of different ways. You can count it as a 1, 2, 3, 4, 5 potential move, or you can count it as an ABC to the downside, where you have a smaller B wave and then C down, and both of them target and push toward this 18,600 area right above this low here where the support is. you would expect them to hold this area and push up, but that doesn't mean they're going to push to new all-time highs on the NASDAQ. Can they? Absolutely. They absolutely can push to new all-time highs, but you would expect them to hold this area, and then we'll see what kind of bounce we get. For the NASDAQ, they got to push it back over the 20,000, 180, 200 area, this peak right here from July 24th or so. They need to push it back above there. From that area, they have 20,482 to get through, and then we can look at new all-time highs. But that area is going to be a major resistance zone, and assuming they can hold, then we could see a bigger downturn on the NASDAQ and potentially call the top end. But we're not there yet. They still have to break more support, and we still need a little bit more structure. For the bulls, as I said, they do need to get over that 20,176, 200 area and then through 20,482. If they can break through that resistance, then we would be looking at new all-time highs on the NASDAQ in the 21,474 area. So right now, key levels to the downside, we're looking at the bulls to hold about 18,600, 18,570 or so. They really need to hold this low at about 18,500. Assuming they can hold that, we would look for them to push back up, at least in a bounce, if not new all-time highs, just depending on what we would get. The key level to the upside is that 20,176 and then 20,482 level. Guys, if you love the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. It'll take you right over to the website. Once you're there, check out our membership plans area. We have 2 incredible monthly plans, and they both come with a 7-day free trial. This is because I want you to get in there, make sure you love it, become part of the trading team, interact with PT and I, and make sure it's for you before you ever spend a penny. You can cancel at any time. We also have our training material. We have our Elliott Wave beginners course as well as our advanced Elliott Wave course. These courses are helping real traders understand the market in a way that makes sense. In the advanced course, we go through all of the really tough patterns that you see in the market that are really hard to figure out, such as the advanced fib levels, diagonals, double and triple threes, flats, triangles, which we just went through a wave 4 triangle in the room and traded the downside of that, and then how to trade Elliott Wave. This is a great background for people who kind of understand Elliott Wave but really want an in-depth understanding of the complex patterns and how to trade them and how to know when they're playing out. However, if this is a little bit complex or you're just getting started in Elliott Wave Theory, we also have our Elliott Wave for Beginners online course. This course is helping real traders make real money and finally understand the market in a way that makes sense. It can be so confusing when good news makes the market go down and bad news makes the market go up. You see it all the time during earnings season, and it doesn't make any sense. That's because Elliott knew that the news cycles meant nothing long ago and that key levels mattered, which is why we give you key levels in these videos. He knew what happened when those key levels held and when they broke, and this gives you a huge trading advantage over the rest of the market. Now, this course is 25 videos where I go through 3 different parts. Your introduction, where we go through your expectations, your mindset and emotion, the KISS method with Elliott Wave and why it works. We go through the chart setup and tools, where we go through every tool you need to use with Elliott Wave Theory, how we use it and why. And we go through Elliott Wave for Beginners, where we give you all of the different waves, show you how to measure them, how to find these key levels, if they're working, the theory of alternation, corrective depth theory, the pivot, everything you need to know to understand this incredibly complex market. Now, the cool thing about both of these videos is if you want to get them both for a discount, you can get our bundle pack and get them for $37 off and get both videos so you can start from the beginning and move all the way through the advanced course. If you want to get them for free and not pay anything at all, simply join one of our monthly rooms, as they are included. In our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where I go through exactly where we are in the counts and what to expect, as well as the training material you just saw. We trade the SPY and the QQQ, and we swing in day trade, which means our trades, we trade quite often in my room. If you're looking for individual stocks, futures trading, income trading, as well as advanced training, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as individual stocks, income trading, futures trading, and his reduced risk binary method that just crushes the market. He gets you in at a cheap price and gets you huge multiples on your money, and it's how he structures those trades that's so unique. Something you really have to see to understand, and that's another reason we give you those 7-day free trial. He also started a challenge account where he put $4,000 into an account trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we'd love to have you in these rooms so we can all make money together. All right, key takeaways for today. On the ES, we're looking for them to make another low here. They've tested it a few times. It would look better with a 5th wave down. 53.85 is that level, 53.87 right in there. It would be that level we're looking for. A break below that, we got to start paying attention. A break below 5,200, this 52.70 area would be very a very big warning to the bulls, and then a break below the April lows would be a major warning to the bulls. For the bulls, they're still looking for a low as well to build off of. They should look for a spike low and then a reversal. First step would be to get back over this 55.33 area, but 56.30 holds the keys to new all-time highs. Back above that, and we're looking at 58.31. So bulls and bears both have big patterns and big levels to watch, and how they react off of those levels is what will matter. Over on the NASDAQ, they are looking for a low. They already actually have the low, so they made the low today, but they still can push down. And with ES not making a low, I'd look for them to make a little bit of a lower low down toward this 570 to 600 area, and then look to bounce up from there. A break of this over here at 18,500, as well as a break of the April lows would be a major warning to the bulls. Guys, that is your market update for today. I'll talk to you tomorrow.